Welcome to the deep dive. Today we're digging into a tech behemoth, Microsoft.
Yep, we're using their 2024 annual report as our guide.
And our mission really is to sift through all the detail and pull out what you really need to know about their business segments, their financials, and where they see things going.
Exactly. Think of it as the essential download. So whether you follow the tech world closely, maybe you're looking at investments, or you're just curious about a company that's, well, everywhere in our digital lives.
This should give you a clear picture, based right on what they're reporting.
Right.
Okay, so Microsoft kicks things off by calling itself a platform and tools company. They say that's been their core idea since, 1975?
Yeah, empowering people and organizations. That's
Yeah.
the line. And the big theme, you can't miss it, is the age of AI.
They are definitely positioning themselves right at the center of that.
They really are. And it's interesting how they frame it. They talk about these like twin dreams of computing machines understanding us and helping us make sense of all this digital information.
Right.
And they see AI, specifically the progress driven by these scaling laws in deep learning, basically. Bigger models, more data, better performance as what's making it happen now.
They even mentioned performance doubling roughly every 6 months. That pace is just incredible.
It's wild. And they see it converging in three ways: natural interfaces, voice, images, video, memory, so the AI remembers context across devices, and then reasoning and planning.
So a much smarter, more integrated experience overall.
That's the goal. But they stress, the tech is only good if it actually helps customers.
Yeah.
So the strategy is weaving AI through everything they offer.
Okay, let's break that down. How does that look in their different business areas, starting with infrastructure?
Well, they're heavily investing there,
Well-
expanding cloud and AI capacity, building out data centers across 5 continents. It's foundational.
Laying the groundwork for all this AI stuff.
Precisely. It's long-term growth. They
Yeah.
need that massive compute power. They even gave an example, Copilot for security, using large language models plus their threat intelligence to help security teams, analyze things faster and better.
Makes sense. Then there's devices and creativity. They've announced something new, Copilot plus PCs.
Right. This is a big push. PCs specifically engineered for AI, running tasks both locally, on the device, and in the cloud. Better performance, built-in AI experiences.
So AI isn't just in the cloud, it's on your machine too.
Exactly. And they're working closely with chip makers, AMD, Intel, Qualcomm, and the PC manufacturers to make it happen, bringing AI power right to the user.
Okay, what about search, ads, and news? Copilot seems central there too.
Definitely. They position Copilot as this AI companion. Intuitive, conversational, adaptable, even encouraging, they say, with voice and vision capabilities too.
Trying to make AI feel more natural, more human.
Seems like it. And they're putting generative AI into Bing search in the Edge browser. They claim it's helping them gain some market share there.
Interesting. And there's a Copilot Pro?
Yeah, a premium version, faster answers, better image creation, exploring paid AI services.
Got it. And then gaming, which is huge for them, especially after buying Activision Blizzard King.
Oh, absolutely massive. That deal closed in October 2023. Their focus is simple: more games, more people, more devices.
And that acquisition brought in hundreds of millions of players.
Huge numbers. And they now have 20 different game franchises that have each made over $1 billion lifetime revenue. Think Candy Crush, Diablo, Halo, Warcraft.
Wow, big names.
Enormous.
Yeah.
And they're not just sticking to Xbox. They're pushing cloud gaming, putting games on Nintendo Switch, Sony PlayStation, reaching everyone.
So it's not just about the tech and the growth numbers. They talk about responsible AI too.
They do. They put out their first AI transparency report, which is notable, and they're really highlighting their sustainability work.
Right, those 2030 goals, carbon negative, water positive, zero waste, ambitious stuff.
Very. And they say AI is helping them get there, like optimizing renewable energy delivery, finding new sustainable materials.
And they've made some actual progress.
Seems so. They mentioned contracting over 34 gigawatts of clean power, hitting their water access goal, and recycling or reusing nearly 90% of their cloud hardware.
That's pretty concrete.
It shows a commitment beyond just talk. They also briefly touch on social initiatives, racial equity, digital skills training. The Skills for Jobs program has apparently trained over 12 million people.
Okay, so that's the landscape. How do they break this down financially? What are the reporting segments?
Right. For the financials, it boils down to 3 main segments. First, productivity and business processes.
That's things like Microsoft 365, LinkedIn, Dynamics 365,
Yeah.
the work stuff.
Exactly. Growth there comes from getting new users and adding AI value. Then there's intelligent cloud,
Azure,
Okay.
server products, cloud services, the big engine.
Yeah, driven by digital transformation, AI adoption, and finally, more personal computing.
Windows, Surface devices, and gaming Xbox.
That's the breakdown. Helps understand where the money's coming from.
So let's look at those FY24 numbers compared to FY23. Microsoft Cloud, that's a big one, up 23%, reaching $137.4 billion.
A huge number and strong growth. Shows the demand is definitely there.
Office commercial products and cloud services up 14%. Office 365 commercial specifically grew 16%.
Again, really solid performance in their core productivity suite. The subscription model is working well.
And on the consumer side, Office revenue up 4% with 82.5 million Microsoft 365 subscribers.
A decent base there. LinkedIn revenue also grew 9%.
And Dynamics, their business applications up 19% overall, with Dynamics 365 itself growing 24%. That's quite strong.
Very strong. Shows good traction in the enterprise resource planning and CRM markets.
Okay, turning to Intelligent Cloud. Overall revenue up 20%.
Driven heavily by Azure and other cloud services, which jumped 30%. That's the real powerhouse.
30% growth in Azure. That's significant in the cloud war.
It really is. Confirms their competitive strength. Even their traditional server products grew 3%, which they link to hybrid cloud demand.
So companies still using a mix of cloud and their own servers.
Seems that way. The hybrid model is still relevant for many.
And the last segment, more personal computing, up 13% overall.
But that's mostly because of gaming, which shot up 39%.
Wow, 39%.
Yeah, and within that, Xbox content and services revenue was up 50%. They explicitly state that 44 points of that 50% growth came directly from the Activision Blizzard acquisition.
So that deal had an immediate, massive impact on the books.
Undeniable. Windows revenue also saw decent growth, up 8%.
Windows is still chugging along.
Yep, but devices revenue, Surface and such, actually decreased by 15%.
So hardware sales are down, maybe market saturation or focus shifting?
Could be several factors. Hardware can be cyclical, intense competition, but the gaming services revenue is clearly becoming a huge, more stable part of this segment.
They also flagged an accounting change, didn't they, about server equipment life?
Ah, yes. Starting in FY23, they extended the estimated useful life of server and network gear from 4 years to 6 years.
Which means less depreciation expense each year, right? Potentially boosting reported profit.
Correct. It spreads the cost over a longer period. Good context to have. They also noted R&D expenses went up 9%.
Driven by?
Mainly gaming, integrating Activision Blizzard, and continued cloud engineering investment. And sales and marketing costs rose 7%, also largely due to Activision.
So investing heavily in integrating that acquisition and pushing the cloud.
That's the clear message from those spending increases, prioritizing future growth.
Okay, so how are they giving back to shareholders? What about returns?
Well, they talk about share repurchases. They finished a big $40 billion program back in 2021, but even in FY24, they bought back over $17 billion worth of their stock.
Still significant buybacks, reduces shares outstanding, can help earnings per share.
Exactly. It's a common way to return capital and signal confidence.
And dividends.
Definitely a focus. They paid out nearly $22 billion in cash dividends in FY24.
And the dividend per share has been climbing steadily.
It has. $2.48 in FY22, $2.72 in FY23, and $3 in FY24. That steady increase is attractive for income investors.
Shows profitability and commitment to returning cash.
Right. Often seen as a sign of financial health. And they include that stock chart comparing Microsoft to the S&P 500 and the NASDAQ Computer Index since 2019.
And Microsoft's line is way above the others.
Significantly outpacing the broader market and the tech index. Shows strong market confidence over the last several years.
Reflects their execution, I suppose.
Definitely. Their strategy has clearly resonated with investors.
So, wrapping up, what's the outlook? How do they see things moving forward?
They double down on AI's transformative power and the Microsoft Cloud as their main growth engine. The plan is continued investment in intelligent solutions, productivity, security, IT management, all while emphasizing responsible AI.
But they acknowledge challenges too. Economic
Yeah.
headwinds, competition.
Oh, yeah. They mention economic conditions and the intense competition in software, devices, cloud. It's always there. They also note the upcoming global minimum corporate tax rate, Pillar 2, expected to hit in FY25.
So potential tax changes on the horizon. But overall, management seems confident.
They state they expect their current resources, cash, investments, operating cash flow, market access, to be enough to cover everything. Operations, dividends, buybacks, debt, capital spending.
So they feel financially secure to execute their plans.
That's the takeaway. Confident in their ability to fund their strategy.
Okay, so that brings us to a final thought for you, our listeners. Microsoft is clearly all in on AI, integrating it across basically everything they do.
Yeah, it's woven through the whole report.
So thinking ahead, say over the next 5 or 10 years, what do you think will be the single biggest factor that determines if they maintain their leadership? Is it just pure innovation speed? Is it how well they navigate the ethics and responsibility side of AI? Or maybe it's something else entirely in this incredibly fast-moving tech landscape.
Something to chew on. Where does that balance lie between rapid progress and doing it right, especially when the stakes are this high?